Good morning, good morning, good morning. Welcome to the show. Give me 1 second here. I am just getting organized, getting everything updated. We are live. We're streaming. If you've got any questions, feel free to put them in the chat. And let's just run through. We got about a minute before market open, so let's just run through and see where we're at. Well, there goes market open, and let's see what we got going on here. Okay, look at that. We're just bouncing all over the place. But let me just go back and look at the dashboard. We're going to look at the 1 month total here. It's been a rocky month. So month started at $90,000 in the account. As the market pulled back, we went all the way down in late July to 78,000. And we're at 95,000 right now, 96,000 before this open, which really is my target of in this account of 4,000 a month. I'm targeting 4%. Usually this is a 100K account, but I pulled a little bit of money out. So right now we're looking at the 1 month total here, and that's going to be, right at around the target of where I'm trying to go. It did look pretty dismal here for me at the end of July, but as the market bounced back, we jumped right back in and got where it needed to be. So let's take a look at what's going on. All right. First off, 30-year notes, ZB. This is the September expiration. August. Looks like bonds are bounding up today. ZB. Let's see if I can open that up and look at the chart by clicking on contracts. I'm going to clear that so I don't accidentally buy it, but looks like we did bounce up. We closed down around 108 and we opened up higher, 109. Looks like 108. You got down to 108.11. That probably was a wide spread. It probably wasn't that low. But that's where we're at with that. And this is my position. If I were to open, I'm a -1. 18 days out. I'm minus a put at 108, which is within the expected move. Now, so it's a little bit of high volatility. What we'll see with the bonds is the IV rank. I think when I made this trade, the IV rank was 14. This is actually quite a high IV rank for bonds, at least in my opinion. So my options on this, I'm going to let it go for a little bit, but my options on the 30-year note options are, as we can see, I sold that for 15 here, and I've got, it's at 41 to 43 is the spread, so I could roll it out. Let's just look at the options on how to play this. Personally, for the moment, I'm just going to let this burn off some theta decay and give it some time. We've got about 18 days left, but if I wanted to trade it, I could buy it back for 43, and I could roll it out into August 28. So 1 week out, I could roll it out and down half a point and make some money, or I could roll it out to September 25th, so the end of September. I could roll that out to a 106 for profit, and that would add another 437, a pretty tight spread right there, to my account, and basically I would de-risk some. So I'm rolling that down $2 and de-risking a little bit. I'm going to wait. I feel like bonds are going to recover a little bit before I do that, but that wouldn't be a horrible trade, and that will be my move if bonds don't bounce up. But I'm going to wait on that. So that's my play on ZB. And then this is the September options for the December contract. And those are just, I'm going to let those ride right now. AMD, looks like AMD has taken a hit this morning. let's look at the AMD shared contracts here. So AMD gapped down this morning. We keep seeing this AMD down, AMD up. I looked at the implied move on AMD earlier before the market for just August 7th. And I don't know if AMD has earnings coming up. They should have. Yeah, AMD has earnings on, it looks like today. August, no, AMD has earnings tomorrow morning, maybe. Let me see if there's a time on that. Tomorrow afternoon. AMD has earnings tomorrow after the close, which is why what we're going to see is this huge brown ruler, which is your expected move, and plus or minus $49. That's a $100 wide spread on the expected move, plus or minus 49. So either way, it could go up $49 is your expected move in 1 week on AMD on a $450 stock. So it could move 25% of its value either direction, which is why your implied volatility is high and there's good money in this. We've got a spread, the 425, 412. What I want to do is I'm probably going to carry that through earnings and see if we get a spike that closes it. The smart money would probably be to roll it out into, I wonder if I did a quick roll on that. I wonder if I did a roll on that just out of curiosity and rolled it out to, say, August 17th. What were we at? We were at 425, 415. I can't even go. It doesn't really have those out there for me. I could roll it out a week and make $1. We're going to let that ride. Welcome in, folks. If you have any questions, feel free to throw them in the chat. I will try and answer those as I go. I'm just rolling through what's open right now. Amazon, we sold the call. We sold the covered call on these 100 shares. It went up with earnings, which is great and keeps going up. And we're just going to let that ride until September. Google, I hold the 100 shares we sold. Google looks like it's going on a run this morning up. Let's take a look at Google. Yeah, Google gapped up this morning. Was that on an earnings play? Let's pull up in Google. I don't know what drove the Google chart up this morning. It started climbing last night. That is good for me. I sold those shares. Let's see, Google. Trade price was $365. I sold the covered call at $370. We're right at $368. That's out for September. We're just going to keep letting that ride and just keep rolling that and let it ride and make me money. Robinhood, we're at a 70 put. Did that one naked for September 18th. That's just letting it go. We'll come back to QQQ in a moment. SK Hynix is down, but not down far enough that I'm worried about it. We're at a 95.75, so a risk in 2,000 on that. And got paid $3 on that 4 days ago out to September. We're just going to let that roll. SLV, which is a silver ETF. Silver was down this morning. So let me look at silver futures. Of course, oh my God, they are dropping like a rock. Of course, I went to sell some silver today, and we're down to 56. So SLV is down. I could take assignment on that if it... So I've got Friday. If it drops down below, I will go ahead and accept assignment of those shares and dollar cost average into the other stuff I was in at $70 with the goal of selling covered calls out monthly. So I'd probably start out in September selling those at 60. That's my plan on that. Tesla just took an absolute beating after their earnings. and they're back on the rise now. So after that epic drop, let's just pull in the Tesla chart and their earnings call. They had an epic drop, but it does look like they're on the move up right now. All right, so that's what I've got going on. Let's just run back to this. Okay, I do have $39,000 of options buying power. It's back up, so we're back up a little bit this morning, $2,000 today. And I can buy up to $79,000 worth of stocks. Goal is to make $200. So what I do is at least I put in trades that with the target of making me $200 a day. So we're looking at QQQ. This is my first trade. IV ranks high for QQQ. I mean, I've seen it higher, but this is great. Run out 7 days on QQQ. This is my base trade. PMCC on Google. So poor man's covered call. So Brent, thanks for the question. We're going to look at a poor man's covered call on Google. So the first question is, for people that don't know, what is a poor man's covered call? So the poor man's covered call is buying a leaps. It's basically a diagonal trade. So let's jump into that real quick. Let's go back to Google. And that would be buying a leaps option, the long-term option out. So we would say we look out 318 days. So maybe buying a year out on Google. And let's see what the cost of that would be right now. So I guess first off, my first thing is Google is up. I dislike buying leaps when Google is up. I would have liked to buy the leaps when Google was down. So if I do look for this play, I look for it when something's depressed, not when it's back on its way up. But so I would look at, say, maybe buying the leaps at 400 or even at the money. Depends on how much you wanted to spend. But you would buy this for a year, say at 42.60. That's going to take, what do I have? Oh, I have something here. Hold on, let me clear that out. All right, so that would take $4,300 to do it. No, that's selling. I want to buy. Sorry. Buy to open. I was wondering why those numbers were wrong. Would take me $4,500. And then what that allows me to do is to sell covered calls basically by covering my position at the 4,000 or 4,500 and not using the buying power to do that. So you're protecting yourself on the upward side. Does it work? Yes. Do I like it in my margin account? The answer is no. And then, so what I'm probably going to do is run that out to September, and then I'm going to sell the September position at the same number. So if I'm going to, I would want to sell that at the 400 or even higher at the 420 and roll that out. So basically what I'm going to do is I'm going to sell it at the 420 and collect a premium on that. But what my problem with that is as we look to monthlies to try and do that, can I make back? Is the volatility high enough in the front month to make that back with what I'm paying for that covered call? And I'm paying about $4,500. Now, keeping in mind that value, if Google goes up, this position will also go up. So if Google were to go up, say $30, this $4,200 call, and obviously IV rank, the implied volatility, the volatility has to stay higher. But if we were to go up $30, then I would spend $4,200 or $4,500 here. And theoretically, if it went up $30 in all the same conditions, it would be worth $5,500. So I would make $1,000 on $4,500. So in a non-margin account or a lower grade margin account, that might be better. But what I found is that it doesn't work for me because there's not enough premium to sell to make that worthwhile when Google's already up. I would have preferred to do that when Google was down, and let's look at that. I would have much preferred that trade back here when we saw Google take the big drop. So we see Google take this huge, massive drop down from 370 down to 315, and we want to buy the 315 a year out and then start trading it as it rebounds, give it a little time and trade. So I guess the question is, what's your goal profit on that trade? What are you thinking to do? If you're thinking to play the upside of it, what I would say is I would probably do it this way instead. I would sell, let's take a look. I would go out to September 18th. If you're thinking an upside trade on Google, I would sell an at the money put and do a spread. So I do like maybe 365, 345, right? I'd collect $600 in premium. And then what I would do is I would turn around and purchase a call at the 410 for 620. Let me switch that. I'd buy it. Sorry, I'm so used to selling. I don't do a lot of buying on premium, but I would buy the 410. So basically what I want this to do is I want it, it's a pure upside move. I'm selling the premium here and collecting that. And then I'm using that premium that I just made to risk it on a double upside move. So basically as this goes up, I would make more money. So that probably would be my move. I think on Tasty, that is, they have it as the, they have the opposite, the Jade Lizard as a, do they call it reverse Jade Lizard? Yeah, the reverse Jade Lizard. Nope, that's a sell. They have a, they do have one, they call that, maybe they call it the butterfly. Don't know what, okay. I don't know what they call that on there, but suffice it to be what that would be. And let's look at the curve on that. Let's put this in, say 365, 345. So we're risking $2,000 there in buying power. And then we're going to buy the 410 for the premium. And let's look at the curve on that and where our profitability is. So as long as we stay above 365 moving forward, then that's profit. That's all profit. And as we move up in profit, as the profit moves up, we're going to make, this is going to decrease in value, right? So we can sell it back for the profit, and this is going to go up. So basically we're leveraging that money up, and our buying power effective on that is 3,700. That's kind of the trade I would look at. And you can adjust these to play with it and play with the curve some to see where your profitability would be and how much you can run this down and just do it with less of a debit. Or you could push this out a little bit. It's an interesting concept to look at on that. In general, what I'm going to look at would be just selling, just selling a put credit spread if you think it's going to keep going up is what I would do. That's just where I'm at with it. It just depends on what your overall view is. So Brent, if you want to throw in there what's your goal, what's your target with that, and then we can kind of take a look at how else to play that. Let me jump into QQQ real quick. Thanks for the question. I hope I didn't confuse everybody. So jumping into QQQ, what we would do here is we are at 690. QQQ is kind of on the upside. So we're going to run down, I'm going to run down to QQQ. One standard deviation out is the 20 delta. IV ranks high. I'm actually going to run a little bit further out. Let's say the 16 delta, 17. Okay, so 665. We're 1 week out. And we're $25 out of the money. I'm going to sell the 665. And the reason I'm doing 665 versus 664 on this is there tends to be a little bit more liquidity at the fives and the tens, not always. So sell the 665 and I'm going to buy back the 645. So that would be 20 wide for $1.55, or I could go 40 wide for $1.98. So in this case, I've decided, I thought about this morning, I'm going to go 645. So this is 2,000, making $1.54 a share. So 154 out of 2,000 in a week. Let's just run the math on that so we know. Make sure it's 159 divided by 2,000, 7.9% for the week. This says buying power is 180 or 1849. The reason it's 1849 is because we're taking the 2,000 spread and we're subtracting what we're earning in premium. And I'm going to run 2 of those today. So I'm going to do 2 of that. So that's going to bring me in $300 in premium. And then my plan is to set it to close at 56 cents. Oh, I didn't mean to do that. All right, let's do this. Click the wrong button there. Let me just fix this. 7 days out, sell the 665, buy the 645, $1.62 in premium. We're going to do 2 contracts. So we're going to take up basically $4,000 in buying power to make 2 times this, $316. Let's see if it fills. All right, and then looks like we filled, but I don't see, where did my, there we go. And then we're going to automatically set it to close at 60 cents. So, and we're saying good till canceled. So basically, just so we look into the history here, we sold that for $1.58 credit. And we're setting it to close at 60 cents. So it's just slightly under the $2 I'm looking for, or $200 for my daily trade. That's my target for the day. And then let's just take a look and see if there's anything else that needs to be done. I'm not seeing anything else I really want to manage today. Let's see, Google. We looked at Google and Amazon. Those are the 2 that I'm holding shares. I would like to exit those positions. They're both in the money, sold covered calls. I've maxed out my profit on those, and I'm just letting time do its thing. They've got until September. I just happened to roll them out from the August ones. No big deal. But that's it. AMD still dropping. Do I want to take another AMD trade on before earnings? Well, volatility's up. Let's take a look. That's not what I want. AMD. You know what? No reason to add some more risk right now. What I would do probably on this AMD trade would be September and looking for a huge downside move. I mean, the premiums are just killer on this right now. If you think about this, it's a $450 stock. I could sell the 340 and buy back the 320. So I'm risking $2,000 to make $270 in 6.5 weeks. $13% in 6.5 weeks. All right, there's my other trade. I don't love the spreads. Let's see here. That's a huge spread too, that far out. Let's see if we can get it filled closer to $3. I'm just going to set that. I don't think it's going to fill today. The spreads are just wider than I'd like to see. I don't know why the spreads are that wide. Even if we jump up to They're 60 cents wide. That's just pretty dramatic. And I'm a cheap person. I'm a frugal individual, as I like to say. And I would rather not pay that wide of a spread, although the premiums are still really good on that. Let's see if we bring it down. Just keep rolling it down a little bit and see if we can't get filled on that. Slowly but surely. And then we'll just, I would probably set it to close at half the profit. Or maybe even, in this case, if you look at this trade, probability of profit's 84, 90% that will hit 50% before the end, max profit of 290. This is one where I might even try and take less out of it. I wonder if I run it down to 260. See if we can get filled here. It still may not fill. So what I'm doing here, I would take it at 260 and then maybe only try and make $100 on that. Set it to close at 160 or even at 200 and just take $60 off of it. Because I feel that this, after earnings, it might bounce up and down, and then I can take a quick close on that. It does not want to fill that, does it? Oh, something just filled. What closed here? So my trades for August 5th were set to close at $2, and they closed. So that profit's been locked up. All right, I'm gonna cancel this. It's not filling. I'm not gonna jump in extra on the risk on that since it's not filling. I just don't love the spreads on that. I've got my. The other thing I could do is actually you know what? I think let's try this. Wonder if I could roll this one out and just de-risk completely off this to September 18th. Gonna cost $235 to buy it back, and we run out to $360, $340. So I dropped this way down from $425 to $360. Go out 7 weeks and I pick up an extra $1. See if that'll fill. Oh, I already have orders in. All right, let's just go to let's cancel that order that's in there. See if this'll fill. I still think it may not fill because the spreads are wide, but we'll see if it'll fill and see what happens. I'm not loving that. All right, we're just gonna not do that trade. What was the trade we had on? Was AMD. Sold this for $135. It's upside down right now. So let's just buy that to close, buy that to close. We're going to set that at 60 cents and run through this earnings and see what happens. All right, that's it for my trades. Oh, what did I do? No, I don't want that. Cancel. What am I doing here? Oh, it did fill. Never mind. It filled. How did I? No, it didn't. Okay. I'm just on the wrong date. There I go messing stuff up because I'm trying to show stuff and not do it. Here's my open positions. We're going to set that to close for 60 cents. That's what I had before. Back to where we're at. buy to close, sell to close. What's going on here? There we go. We're back in it. All right, my mistake. Brent, did you have another question on that poor man's covered call on Google, or how to play that, or what you might want to do? I don't love it because Google is up. I would have preferred a poor man's covered call when Google was down, not right after a huge spike up. That's just my opinion. But thanks, guys. Thanks for watching. If you've got any questions, throw them in the chat. Do me a favor, click the like, click the subscribe, and that's all my trades for today.